Hey guys, my name is Mike Munzing with Munzing Mortgage Group. I've been down here in San Clemente actually for the last 7 years or so, but I've been around the South Orange County real estate market for about 30 years. Love being here for you, the realtors. Love being here for you, the buyers as well. Go over to my website at www.mikemunzing.com. It'll pull up my site. But what I also want to promote as well, let you know is out there, is my new financing flyer for you, the realtors, when you're holding your open house. I know a lot of people put those out there. I've worked very hard to bring a bunch of those together and really lay out a common sense financing flyer. When I go visit you at your open houses, I pick up some of the financing flyers that you have there. Once again, 30 years in real estate. I can't make heads or tails out of what your loan officer is trying to tell you, the point they're trying to get across. It doesn't make sense. I've cleaned it up. I've made it very detailed, lots of information, but also a good down here at the bottom, it covers the rental equivalency. I want to show at the listing what the equivalent rent would be once you take into account the tax deductibility of the payment and the property taxes, or at least the interest portion of the payment and the property taxes. Very effective. It helps those buyers see that, hey, once I get that tax deduction, I will save a lot of money from renting. So works out great. Great flyer for you. Also want to let you know what's going on in the industry this week. The word came out from the CFPB, the scary CFPB, out of the government, that the new TRID rule, bring up the little flyer for the TRID rule, which is the truth in lending disclosure statements. All the new rules are going to be affecting our closings, affecting our deals, affecting our buyers, to be sure, has been postponed until October 3rd. They've kicked it out a couple of months because a lot of the lenders and the realtors and the loan officers were not 100% sure what the government wants us to do. I mean, heck, the underwriting guidelines that we've been working on the last few years, even the disclosure statements that we've been doing, we're never 100% sure. I work with a bunch of different investors, and every single loan, depending on the investor, I have to see how they want me to fill it out. Because every investor, even on the existing stuff, they have a different way of filling it out. So hopefully, everybody will get on the same page with this one again, and will hopefully simplify the process. But when change is out there, it is scary. It is hard to know what's going on. So once again, they've postponed it to October 3rd. There was hinting of it, and now they've confirmed it. Kind of a good thing. Get the bugs out of that. Okay, I want to jump into Stephen Thomas's report for the week. It is always informative. Stephen's been around for a long time. He's a statistician. He's brilliant with the numbers and analyzing the market. What is he saying this week? And if you're not subscribing to his report, be sure and do that. It is over at www.reportsonhousing.com. He's got growing numbers of subscribers, so I think a lot of you are going out and doing that. But his point in this week's report is that even though the prices are climbing, the time on market is also increasing, but we've got a very distinctive 3 types of markets, or 3 price ranges. The one I want to mainly point out right now is that below $750,000 range. That has been extremely hot. What's he say here? It's flying off the market, but that is basically 48% of the market, but it's 71% of the demand. So the big demand is in that lower end part of the market below 750,000. But he also says we've got to keep addressing the fact that the time on market, or the expected time on market, has been increasing for properties above 750,000. So the bigger properties across the whole county are extending out a little bit. That's 52% of the market, but a lower part of the demand. So keep that in mind. Some of that has to do with the loan programs that are available. Once again, conforming loans are still capping out at 625. What is also important, as he points out, is that we are right now heading into this hot summer market. But as he's put in other reports, the spring market, the last market, is where the hottest buyers are. We think the summer market is because that's when the closings are happening, but new buyers going into escrow may start slowing up a bit. So he really encourages in his report that the sellers pay clear and close attention to the way they price their homes, because as we get into the end of the summer, into the fall months, things will start slowing down. Let's take a quick look at the next page here, and then I'll bring up the chart. That's for the current inventory, and you can see it's trending upwards. Since the beginning of the year, we've almost had a direct straight trend upwards, and we've got one of the biggest jumps this last 2 weeks that we've had all year, and that is up 4% in 2 weeks, or 258 new listings in Orange County across all the price ranges. So currently we're sitting at 6,534 homes, and that may start leveling off some of that price increase as well. Now, as for demand has increased about 2%, and that's 60 escrows. Now, Stephen points out that the escrows are how he looks at demand, because those are the properties that are going into escrow. It's actively where the market is today. It shows absolutely the clearest picture of what's happening today, not 30, 60, or 90 days ago. And that is currently 3,094 properties are currently in escrow throughout the county. And finally, the distressed market, the distressed breakdown for short sales and foreclosures, and that's jumped about 11%, still a small part of the market, but that's up 21 homes for the county overall, and that puts us at about 212 existing listings on the distressed side of the market. So interesting report, always has the great tables in the back. He also, in his emails, when he sends that to you, he's got pages and pages of charts and graphs and really detailed information that is wonderful to give to your buyers, or at least talk to your buyers about. Absolutely talk to your sellers about, because they need to know you're the professional in the business to advise them on how to price their homes and how to work with this market to get their homes sold and not be sitting on the market for 6 months, which is never fun for you and certainly not fun for them. Well, hey, we're heading into what looks like a gorgeous weekend, and I hope that you have a great time. I will be out hitting open houses. This is a weekend. I'm out working. I've got those financing flyers, so send me over your MLS numbers if you're going to be holding an open house, and I'll send you back a PDF with a great financing flyer, today's pricing, so you know what's going on. Well, I love working with you, and I love working with your buyers. So God bless you, God bless your families, God bless this beautiful country. Let's work together. Remember my phone number, 949-689-5626. Don't forget my online applications for your buyers. So have a great weekend. We'll talk soon. Bye-bye.
Money, 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 money.